Okay, let's go.
Most traders who consistently lose money point to their strategy. They tweak their indicators, switch markets, and keep searching for the perfect entry. But the true cause of their failure isn't technical, it's psychological. Institutional professionals don't survive decades on trading desks by predicting the future. They survive by operating within specific, disciplined mental frameworks that keep their emotions completely out of the equation. By the end of this video, you are going to construct a tangible 3-part daily trading protocol that mirrors these exact professional standards. To build this today, you only need 3 things you likely already have: your current trading strategy, a digital spreadsheet, and your standard trading software. Shifting away from retail panic and into institutional discipline requires treating your daily activity like a structured business, not a trip to the casino. Step 1 is your pre-market checklist. What you do before the opening bell rings dictates your performance for the rest of the day. Before you look at a single chart, write down your absolute maximum daily risk limit on your document. This is your hard stop for the day. This illustrates the sequential logic of institutional survival. First, protect your capital. This keeps you in the game to find opportunities. Survival comes before profit. Next, accept uncertainty. The execution you're about to make is 1 trade out of 50. One individual outcome means nothing. Professional traders do not try to predict what the market will do next. Instead, they react to current market conditions, based entirely on their statistical edge. To complete this first section, your protocol needs 3 definitive checkmarks before you can execute a trade: market conditions reviewed, risk defined, and setups identified. Locking in this pre-market routine removes the anxiety of trying to guess the future. You are now free to focus purely on executing your edge. Step 2 covers in-trade execution. This is the precise moment when fear and greed most frequently derail an otherwise solid plan. Open your software settings right now. Change your profit and loss display from raw dollars to percentages. Watching raw dollars bounce triggers emotional attachment. It feels like losing your paycheck, leading to fear-based exits. Switching to percentages makes that data objective math. Without that objectivity, greed pushes traders into oversized positions they can't afford to lose. Worse, taking a painful hit often triggers revenge trading, where you immediately jump back in to win it back, multiplying the damage. Write down these 3 non-negotiable rules for your active trades. Wait patiently for the setup to come to you, detach entirely from the monetary value, and never revenge trade. Your ultimate psychological goal during in-trade execution is to feel completely bored. You should be perfectly objective and devoid of stress while trading live. By stripping away the dollar signs and relying strictly on the risk limits you set before the market opened, execution becomes a mechanical process rather than an emotional roller coaster. Step 3 is your post-market journal. Unrecorded trading data is completely useless to your long-term growth. Immediately after your session ends, open a new spreadsheet. You need to create 5 specific columns to log every single trade: entry, exit, risk taken, emotions felt, and lessons learned. The emotions felt column is a mandatory field. It is arguably the most critical component of this entire protocol. There is a heavy temptation to only log the setups that worked perfectly, while conveniently ignoring the embarrassing mistakes or those revenge-driven losses. You have to log everything. Institutional traders derive their greatest edge from doing exactly this. They objectively audit their worst mistakes and track their emotional breaches to ensure they don't repeat them tomorrow. A rigorous post-market journal acts as a mirror. It transforms raw historical data into a continuous feedback loop that drives your mastery of the market. Look at the physical protocol you have just built. You now possess the exact framework needed to navigate before, during, and after the market. This is how you execute with an elite mindset. Decades of data show long-term trading success is not a product of supreme intelligence. It results from superior risk management and relentless emotional control. Here is your challenge. Execute your next 50 trades using this exact protocol, without altering a single rule of your underlying strategy. The ultimate edge in the financial markets is not found in a secret indicator. It is built through the disciplined, daily execution of proper trading psychology.